Today we're talking about gold. Now I'm sure we all know what gold is. It is a commodity. We're going to talk about the fundamentals, the technicals, and then a trade breakdown at the end. So gold is obviously very popular as an investment. We're going to find out if it still is a good investment. I like gold because it's a real tangible object. It's a thing. You can see it. You can touch it. Everyone knows what it is. It's accepted as currency since the beginning of time. There's a finite amount of it. You have to mine for it, so it's tough to get. There's only so much of it. Once it's gone, it's gone. So it really is protected with inflation. It usually goes up as inflation goes up. So, and gold it's got a lot of uses. So it's useful as a conductor. It's in like all your cell phones, all your electronics. It's the best conductor we have. It's jewelry. So there's a lot of uses for gold. So jumping into the technical aspect, we're looking at this chart here. This is gold. So it's currently trading at $1,912 a US ounce, and this is the 200-day moving average here, so we can see it is above. It crossed over last December and has been above since, so gold is bullish by that definition. So as far as buying it would still be pretty good overall. Now breaking it down to areas of support and resistance and understanding where we might want to get into a trade and if it's going to continue to go up, or maybe it's found its new time high. It hit 2050 up here back in early May, and so like maybe that's the new high now, and maybe it won't break that for a long time. But analyzing this from a technical aspect, I would look at a few things here. So there's this area up here, and right here you could even extend it, so like the 1980. So this came down, touch, came back up, touch, broke lower. So gold is bullish because it's above this moving average. However, it's been bearish since May because it hasn't made any new highs. So we got to look for an area where buyers would be. If I was to buy gold, where would I buy? Right here is a good spot. You can see this is the daily chart here, so we can see that some daily candles came down here, touched this area, and shot up. So previously, back in mid-March, this area was respected. So we don't know if it's going to be respected again. History usually does repeat, and it'll determine the future based on what happens when it comes down to this zone. We can see that right now it is struggling to go up. You can see that there was 3 more wicks here on the daily chart, and now it's breaking down with this is a bearish engulfing candle. It's much bigger than the last candle, and it's going to close in 3 hours-ish. If it closes like this, which I believe it will be, it'll just probably go a little bit lower and a little bit lower. So this is an area, this is my first area that I'd be looking at for buying position. So I would have to see it come down to this area, reject it, and then I would shoot back up. But without those rejecting candles, without price rejecting this zone, I'm not taking it to zero. And this is normal market behavior. So when price goes up, obviously, if you think about it this way, if gold is bullish, why is it coming down? But if you bought gold right here, you've already made your money. So now the only way you can make more money is to get rid of it, so sell it up top and let it come back down and then buy it again and ride it back up. If you just held it forever, you won't make any money. So it makes sense that as price goes up, there's more people that want to sell it because they've already made money. And also the reverse is true. As price comes down, more people are going to be enticed to buy it at certain levels. So we can see this is a prime area, but then also this is a prime area. So, and they actually overlap, which is nice. So you got this area here. So support and resistance work together as price moves above and below it. So when price made new highs here, then it came down, it came up, it rejected this area and then made a lower low. Then it caught this bottom area. The buyers came in, bought it up through the roof, and then now it's just retracing. And so if you throw another tool I like to use is Fibonacci, you can see that it's literally in its zone here. So this is a retracement zone. Between the 50% and the 618 is where a lot of trades occur and price tends to switch. I mean, nothing's guaranteed obviously, but this is just one of many tools you can use. And there are other levels, other Fibonacci levels. I don't have them highlighted because I don't use them, so I just have the 50% and the 618, but there is a 786 zone right here which would function in this area. But looking at that, I would just see how, and price a lot of the time does respect this 618 is very prevalent. So I would wait till price comes down to 1907 ish, because it usually overshoots, but once price hits 1907, I'm actually going to set an alert here. Once price hits 1907, there's a good chance that it'll start to reject and then at least demonstrate that it wants to move back up, and then it's going to come down to breaking previous zones now that it has already broken, because now all these zones that it broke are going to function as resistance. So once price comes back up to 1958 level, there's going to be a lot of rejection, because this is where a lot of buyers failed to buy here. So now it's going to have a tougher time breaking through that. So you're going to need a lot of momentum from one of these deeper zones. Again, you have the moving average coming up, so it could respect that and find support with this moving average. So if, let's say, gold takes its sweet time and it hits like right here, this moving average will catch up and it could help it on its way up. But so breaking down a trade now, what is the trade that I would take if I was to just gold? Rid of that. So first off, like I said, I would wait for it. This is the first zone here that I'd be concerned about. And then I would look for an entry here based on candles closing. It has to be a daily candle, multiple daily candles ideally. I need to see rejection, and then I need to see some bullish momentum coming out. So it would have to reject this zone, make some wicks just like these ones, and then target back up. So your levels that you could take profit from, we'll come up with a few here. So we'll say 1902 is your entry. We'll use round numbers because we'll say 1900 actually. So that's another important part. So this 1900 level, price loves whole numbers. Banks use them, everyone uses them, everyone likes whole numbers. We don't like 1902.58. Like that's not a number that is nice to look at. It's nice to take positions from. You want a whole number. So $1,900 an ounce is a prime number. Like that is a price that a lot of orders would happen. It's ideal to take profits at that and then also place positions. So everyone that's sold up top here would be more likely to take profits at 1900 instead of riding it further and further down, because then it gets a little risky, because they know gold is bullish. They know it's going to go back up, but they don't know when, and they've already made their money because they shorted it at 2040, 2050. So they've made their money. They want to get out. And they want to re-enter that. They want to buy it here, so because they sold it up top, and they want to enter the buys here now. So not only do they need to dump their positions here that they sold, but they need the capital in order to buy some down here. So 1900 is my entry. My stop would be outside of this zone a little bit. So, and we always shoot for a 2-to-1 risk to reward, ideally. So I would look at maybe 1880. We'll stick to whole numbers. 1880 as my stop loss. And then your first target here, you might be able to get 1.5. You're not going to get the 2, but you get the 1.5 for 1930. So this is take profit 1 and then take profit 2. We will shoot for that 3 right at 1960. So you got your entry at 1900. Your first take profit is this zone, 1930. Your second take profit is 1960, and then your stop loss is 1880. So that's the trade I would structure if I was to take it and everything else lined up down here. Like I said, these candles wicked and it looked like there was bullish momentum coming in, then I would take that buy. It's a very, very respectable trade, very fair. If that let's say this all plays out and then it comes back up to here and then rejects and comes all the way down, and I miss my take profit, or it starts rejecting in this zone and then all of a sudden I take the trade and then it breaks down lower. It is what it is. You're not going to win every trade. If you can win half of them, that's good. You just need a good risk to reward system, which we have in place here. That's the best you can do. You kind of got a 50-50 chance, so you got to make your best educated decision, and then hopefully it plays out, and if it doesn't, you just wait for the next trade and then hit it again. So do I believe gold is a good investment? I do. I really like gold. I'm not I'm not somebody that praises gold and like gold is everything. Like cash is still king. I mean, you can't if you've ever felt gold, which I have, it's very heavy, very, very dense, very hard to move. So it's not really practical to use as currency, but I do like it as a storage of wealth, and I do think that it is a long-term thing that if you held it, you're never going to be unhappy with it. So that's my fundamentals, my technical breakdown of gold and trade setup.